Well, construction on fewer homes broke ground in July compared to June, leading to a decline in housing starts of 10%. According to the Canada Mortgage and Housing Corporation, the biggest drops were in Toronto and Vancouver. Housing starts fell in Vancouver by 23% and in Toronto by 29%. While the CMHC says the trend is still heading higher, that the number of homes being built is growing. The CMHC's chief economist, Bob Dugan, says the effect of the most recent interest rate hikes on housing starts remains to be seen. Let's bring in Kevin Lee. He's the CEO of the Canadian Home Builders Association for some perspective on this. Kevin, thanks so much for joining us today.
Thank you for having me.
So what are you seeing out there in terms of, new home construction happening?
Well, I think the drop that we saw this past month wasn't a surprise for us at all. We also just released our own housing market index, which is an industry sentiment survey that we survey our membership looking at what's going on in sales centers across the country, and it tends to run about 6 months ahead of the starts numbers. So we've been very concerned with respect to housing starts for a year now, because there is a bit of a lag between the time the interest rates go up and the time that, the starts would show up. And we are expecting a much slower year in 2023 as compared to the past couple of years.
When it comes to projects that, are already underway or, partially underway, are you seeing things get canceled or developers considering canceling projects?
Less so if they're already underway, but in terms of new projects that were planned, our most recent surveys showed that 22% of our members are actually canceling projects that they were hoping to move ahead with. So definitely signs that a slowdown is very much upon us.
Right. So part of into the planning process, but not necessarily breaking ground at that point, which would obviously, be a bit harder to reverse. When it comes to the lagged effect that you mentioned, Kevin, how long do you think it will take for the sort of full effect of the recent rate hikes by the Bank of Canada to end up being felt by the industry?
We feel them from a sales perspective, almost immediately. And so as soon as those, quarter point rate hikes came in June and July, we saw that immediately in sales centers. The trick is that doesn't turn into slower starts for 6 months to a year or even more sometimes, right?
Right.
And so, and we saw that again in the wintertime when, we had that rapid escalation of interest rates last year. And then in January, when there was finally a pause, we saw a return to the market of buyers that were just waiting to say, okay, interest rates aren't continuing to go up. Now's the time for me to get back into the market, because obviously we still have heavy demand and not enough houses to go around.
And what about the cost side of things? What are you hearing, when it comes to materials, labor, wages, that sort of, those factors that would also be, potentially adding more pressure to some of these home builders?
It really is. And that's a great question, because I think, in the resale market, prices go up and down a little bit more as a function of interest rates. But when it comes to new construction, you have a lot of baked in costs. And so, lumber everybody knows how high it was. It has come down, but it hasn't come down to pre-pandemic levels, and other materials have gone up. So we're looking at, construction costs on a typical single family 2,400 square foot home still of $65,000 more than what we were experiencing prior to the pandemic. So that adds a lot to the price tag, and labor is up about 28% in terms of cost. So that really adds up for the home buyer.
So when you're looking ahead, Kevin, and you hear a lot of the messaging about this country needing more housing, how do you see the two of those lining up in the years ahead, if there's a possibility that we're going to be seeing less construction as a result of these higher interest rates down the road?
Well, I will say it's really important that we now have those numbers. The federal government and CMHC have come out and said that, we have this housing deficit. We need to build 3.5 million more houses over the next decade than we would normally. We'd normally build about 2.3 million over that period. So you're talking about more than doubling housing starts. That can only happen, first of all, if you recognize that that's what you need to do. And then secondly, if you put the policy in place and policies in place to make that happen. So, we've got lots of recommendations for the government right now on how to help the financial side, to help people be able to afford to buy a home. Things on labor and immigration to help make sure we have enough people to build those homes. But we're not headed in the right direction right now with interest rates. So we could use a few policy changes around, for example, we always talk about returning to 30-year amortization periods for insured mortgages for first-time buyers, because right now you can only get a 25-year am. And if you could create a 30-year amortization on insured mortgages, we'd really help young families get into housing, and that would also help turn the tide. So it's going to take a comprehensive approach, and all three levels of government have to be involved because there's a lot of barriers to more supply right now at the municipal level too.
Yeah, that is interesting on the, changing on the buyer side of things. But I am curious on the builder side of things, Kevin, if there might be something, more helpful when it comes to, lessening costs, whether it's, the burden of a bureaucracy, perhaps, when it comes to getting things approved.
That's a huge issue. There's no question that, we have certain cities where it takes a long, long time to get permits, and there are a lot of delays, and it's slow, and time is money. Another real big factor in the price of housing these days is development taxes, development charges, lot levies, amenity fees. There's all kinds of different ways that municipalities are adding to the price of housing. It adds up. Some of the latest stats suggest that 31% of the price of a home in Ontario is government taxes. And so, at the federal level, we can do stuff around GST. Hopefully at the local level, we really need probably some to ease back on those development taxes, put that in the overall tax base for the whole city, and not just put it on the buyers of new homes, because it never used to be like that. And those numbers have gone up 700% in the past 20 years. So that's a huge cost on a new home.